Hello, everyone. This is Ernie Humphrey. I'm the CEO of Treasury Webinars. Thank you for taking the time to join us for our webinar today, Treasury in 2026, Metrics, AI, Benchmarks, and Opportunities. Thrilled to have with me today Eric Delafoy. He's the Vice President of Sales and Partnerships at Nihilus. This is my first thought leadership webinar partnership with Nihilus, and I'm thrilled to have him as a thought leadership partner. Eric, welcome to the webinar. Why don't you give us a little bit of your background in what you do at Nihilus?
Yeah, sure. Thank you, Ernie. I appreciate that. As you mentioned, I am the Vice President of Sales and Partnerships at Nihilus, but my background is actually in the accounting space. I started my career in public accounting as a CPA. I now tell people I'm a retired or recovering CPA since I don't practice anymore, but I've been in the Office of Finance my entire career in various capacities in consulting for them, in the space itself, selling to it on the software side and on the professional services side. And now at Nihilus, I lead the ecosystem building for everything that we're doing with banks, with professional services firms and the like, and also leading our sales team. So happy to be here.
All right. Thank you very much, Eric. And once again, I want to thank Nihilus. They share my commitment to thought leadership, which is evident in partnering on this webinar, but also Nihilus was the exclusive sponsor for the survey results that we are going to be diving into today. Just a few housekeeping items. If you're interested in a certificate attendance for today's webinar and you did not indicate that in registering for the webinar, please go ahead and send an email to Ernie@treasurywebinars.com. To get that certificate, you have to stay on for the duration of the webinar and answer all of the polling questions. If you'd like a copy of the presentation, please send an email to me as well, Ernie@treasurywebinars.com. We appreciate your consideration in taking a short survey at the end of the webinar today, as we always strive to improve the ROI we offer our attendees for their valuable time. So let's go ahead before we dive in. Let's give you a little bit of roadmap of what we're going to be doing. So really the first thing we're going to do is give you a little bit of an overview, some demographics of the survey we're going to talk about. It's called Treasury in 2026, Metrics, AI, Benchmarks, and Opportunities. Also want to mention that I'll mention a few times that there was a very comprehensive survey report that was done, and that is going to be posted on the Nihilus website. So stay tuned for that. And also associated with the survey are going to be 3 blogs. So there's going to be a general blog, and then there's going to be a few industry specific blogs as well. So please stay tuned for that. So we're going to give the survey overview, and then we're going to look at the role of the Treasury Department. What is that role? Is it strategic? I'll talk about some momentum I've been seeing regarding the role of Treasury, and then we're going to dive into some survey results a little deeper, Treasury priorities in 2026, and we'll talk about the challenges that Treasury faces in 2026, which we weren't expecting at the beginning of 2025. So I'll share some of the impacts that have already happened due to the global economic uncertainty driven by trade policy, chaos, I'll put it that way, geopolitical uncertainty, and there's just a lot going on in our world right now. So we have some results on how has that already impacted cash management, DSO, DPO, hedging, and all those things. And then we'll take a little bit of a dive into the AI side of things. So we'll look at the role and impact of AI in Treasury. So we've got some really interesting survey results. Where are companies leveraging AI in Treasury? And why are they leveraging AI in these areas? And why are some companies still a little hesitant to be investing in AI in Treasury? And then we'll share some key survey inferences, and I'll be bringing in Eric along the way to add his thoughts and commentary as I drive us through the survey results. So a little bit about the survey overview. So we had almost 260 responses for the survey. We had responses across the office of the CFO. We made sure that everyone was an expert and in the weeds with cash management. So we have a lot of roles. We have Treasury Manager, Director of Finance, Cash Manager, Controller. And it's especially some of the smaller companies, the cash may be driven more by the VP of Finance and the controller of the cash management side. So really happy with that, getting different perspectives on those involved in cash. Company size, we had a pretty good range there. So we had some really, I would say, it depends how you measure, right, mid-market. So I would say probably less than 50 million was pretty common for small company. And then we go up to $1 billion. So we have a really good representation in the mid-market, and then more than $1 billion. So we have 12% there. So a little bit of a barbell, but focused in the mid-market, and those company sizes are represented. And then we had a concentration of industries. We had a particular focus in engaging folks in a few key specific industries. We have software technology, healthcare, and manufacturing, and retail. And the industry specific blogs that you're going to be seeing that I wrote for Nihilist related to the survey, those are going to be focused on the results of the survey specifically for the Treasury and finance practitioners that work in software technology and manufacturing. So when I was in Treasury, I always wanted to see more survey results that were a little bit more industry focused. So that's something I'm excited to be sharing with everyone as well. So really happy with the survey demographics. And then just a little bit more about the lay of the land at the Treasury and finance practitioners who responded to the survey. We asked folks, what are the countries, suppliers, and customers? How many countries are you in? So we had over 80%, or at least in 2 countries. And then if you look at the greater than 6%, right, we have over 50%. So we have a pretty good deal of complexity there. And then a number of bank accounts as well. So we have quite a few companies that have at least 20 bank accounts. And so when we're looking at the challenges there, we are seeing a fair degree of complexity. Obviously, it's driven more by the numbers. It's also driven by which countries you're in as well, obviously. So you can be in few countries, but if you're in Japan or other places that have quite a bit of regulations, in China, and moving cash is very difficult, even in Europe still, in Italy and countries like that. So that also drives complexity. Just wanted to note that. So we want to touch on the role of the Treasury Department at the company. So before we do that, I'm going to go ahead and launch our first polling question. So I'm asking you to share with me, how would you characterize the role of the Treasury Department at your company? Would you say you serve as a strategic advisor on strategic matters with the CFO, occasional advisor to the CFO? You're really primarily a supplier of data and reports that informs decision making, or is it just the case at your company that Treasury is purely transactional? I appreciate everyone's consideration in taking the time to answer all of the polling question. Again, if you'd like a certificate of attendance, please answer all the polling questions. And then also forgot to mention, if you have any questions as we're going along, please get your questions. There is a question mark tab, questions, on the top of your control panel in the top to the right. And so I'm going to go ahead and leave the polling question up for another few seconds. Then we're going to go ahead, take a quick peek at the poll results. I'll make some comments, and then I'll ask Garrett to see if he has any thoughts on it, and really what he's been seeing. And then as we go, I'll also touch with Derek about some of the conversations his teammates have been having, and if those conversations have changed as the dynamics in 2025 continue to unfold. So let's go ahead. Let's go ahead and take a quick peek. So excited to see we have 41% of you, the key strategic advisor to the CFO, and I'm going to give away a little bit of the results. We're also going to talk about how often the CFO is contacting Treasury teams for daily insights, and that number was a lot more than I thought. So I'll confess, when I was in Treasury, I got a little nervous when the CFO called me because it wasn't that often. So we had the little display on the phone where it said CFO. This guy's name was Greg Singh-Sek, the most brilliant person I've ever met. So he did quite a bit before I left, chairman of the board, all that good stuff. Occasional advisor, 31%. So really excited to see that only 6%, right, in the audience is on that purely transactional level. And if I were to have taken a poll of these folks, probably even going into 2025, I would imagine that there wouldn't be as quite a percentage of key advisor to the CFO, because with all these dynamics going on, Treasury professionals and Treasury leaders I've talked to are being consulted more often than they were in the past. So Eric, does anything stick out to you here as well? What are you hearing?
Yeah, no, I appreciate the question, Ernie. I think similar to your sentiment, it was a little bit surprising to see um,
Yeah,
much weight as a key strategic advisor. But I started thinking about the question a little bit. Perhaps this is the role of Treasury at the business. This is how it's intended to be, but in
right,
reality, it might be a little bit different. I don't know. There might be a difference there.
right,
But for me, at least from my perspective, I talk with a lot of treasurers, and the ones that get pulled in, or the ones that are getting pulled into the office of the CFO, often are the ones that typically have a live picture of cash. They can
right.
easily answer what's in the bank today, what's likely to come in, and what bills are going to hit next. And when that view is late or fuzzy, then they end up paying a price, like borrowing when they don't need to, or missing easy interest, things like that. The reason I'm sharing that is because for folks that are trying to become kind of that strategic advisor, if you can have a simple rhythm of knowing, at this time in the morning, we're going to know all of our balances. And by the end of the day, we know the biggest expected inflows and outflows. If you do that consistently, then the CFO is going to start calling you guys in long before big moves are made, and not after. So curious to hear your thoughts on Ernie,
Yeah,
if you're seeing anything different.
yeah, absolutely agree with you at 100%. And to me, it's still a little puzzling how folks don't have the visibility into daily cash, and it's still a pain point as well. And so, just to dovetail on your comment, you look at it this way. So we have 6% that are purely transactional. So that means you have interactions with the CFO and the C-suite. So we need to be able to communicate what we know with impact, right? So we need to get better at explaining the results, giving insights, predicting what we think is going to happen. And part of what allows us to do that is leveraging solutions, right? Like a nihilist that gives us more time, right, to do some strategic thinking and get out of those non-value add tasks. All right. So compared to our audience, a lot of alignment on the top side. So we saw 43% of our survey respondents had that strategic role. We had a lot more than in our audience as far as being purely viewed as a transaction hub. So that would be on the transactional side. So there is some work to do there. But if you are getting that right, getting that interaction, it's about, okay, what else can I provide? How can I be more valuable? As Eric mentioned, is there a time of day? Is there a frequency that I know I'm going to be able to add value? And another part of that is just being ready, right? And you need to be ready. So you're expecting something to happen. Maybe there was that could possibly impact your customers and your supply chain. And so your CFO may call and say, all right, do you expect our receipts to drop? Are we going to have to do more borrowing? What are the impacts of that going to be? But what I've seen over the past 4 or 5 years is that in general, the results that I've seen, the strategic role is going in the right direction. And along with that is coming more responsibilities and more time spent on strategic activity. So all good. And then what I'll do is I'll dive in a little bit as we go through the results and more in the survey, in the key inferences. So we like to look at results by company size. So I look at company size in terms of number of employees. I know I showed revenue. What I like to do is small is less than 0 to 100 employees, 101 to 1,000 is mid market, and then over 1,000 employees is going to be enterprise. So just kind of looking at things. So what we start to see, the thing that really jumps out to me is how infrequently the folks at enterprise companies are looked at as transactional. So very happy to see that. I'm a bit surprised to see that number is still so high with the mid-market companies in this, in the survey. So a little bit there, but again, what I usually look for is are there dips in here? And then I also want to say that we're probably going to draw some inferences based on the data, but it's not 10,000 observations. A lot of what I'm hoping to do is to inspire you to think a little differently, to ask questions of yourself, ask questions of your colleagues, have conversations with your colleagues, maybe have conversations with your suppliers and your customers as well to increase those collaborative opportunities. Eric, let me bring you in here. Are you getting a sense that there's correlation between the size of companies you're talking to and how much of a strategic role they play at all?
Yeah, actually, I mean, we look at size of business by revenue band,
Yeah.
not employee size, and ultimately, what ends up happening is for the smaller organizations, they're almost like in a pre-treasury scenario where, like you
Okay.
mentioned at the beginning, where there's a
Yeah.
director of accounting or VP of finance or someone like that that's performing the treasury functions. In those cases, yeah, I do see it be more transactional, mostly because they've got a lot of other responsibilities, or at least that's what I infer. But for the folks that are, or the business is a little bit larger and they can have a dedicated treasury, at least person or team, then they become a little bit more of a strategic lever. So I think there's a correlation between, the increase or rather decrease of transactional guidance provided and more strategic guidance provided to the C-suite with the maturity of the business, which
Right.
typically correlates to the size. But that's what we're seeing.
Okay. Right. Yeah. I just want to mention. I forgot to mention this. So one of the qualifying questions for anyone that answered was that they have at least one person at their company that has a treasury or cash title in there. So we tried to catch people. They may still be getting up and running, but at least they recognize that this deserves the attention of a full-time person to effectively manage treasury at their company. So we also looked at this by industry as well. So we got a lot of content to go through. I just wanted to kind of show you some of the things that we are looking at. And so I'll kind of dive through these slides a little bit quickly, but I want you to know again that there is a very comprehensive survey report that dives into these roles. So if you happen to be in healthcare, technology, manufacturing, real estate, or one of those industries, there's going to be a lot more detail there for you. However, there's value in whatever industry that you're in. It just becomes a little bit more pointed. That's exactly where you practice treasury. We are also trying to look at trends, how people practice treasury across industries, and that is somewhat driven by the challenges that they face. And this question I thought was interesting: how often are you consulted by the C-suite? So you see 25% daily. That surprised me a little bit. Weekly is 49%, monthly. But as Eric said, it makes more sense to do daily if the CFO or the best C-suite knows that you already have the information and can bring value. But to me, there is a right sizing to that. So if you don't give the CFO the right information, untimely information, too much information, then you are going to get questions and you have to end up doing all this analysis. And the reason you were asked to do that was because you didn't have accurate information. Any color you want to add here, Eric?
Yeah, no, I was thinking about something you said earlier about kind of the economic situation we've been in with some of the
Yeah.
geopolitical volatility. And for me, at least from what I'm seeing, organizations that are making that volatility practical are the ones that are kind of coming out ahead. And what I mean by that
Right.
is might be contradictory to what you just said a little bit, Ernie. So forgive me for this, but I think when the world moves fast, speed typically beats perfection. If you can answer the what's true today quickly, then you can move cash to earn interest, time payments smarter,
Yeah.
avoid last minute loans, etc. Frankly, the recipe is pretty boring, but it's powerful, right? The same day bank balances, a one line who promised to pay update from AR, and a short AP schedule of what's going out. Most teams we talk to already have this data. It's just a matter of making it show up on time every time so these folks can act quickly.
Yeah, I think my point was, and thank you for your comments. My point was more around if if we are giving them information that might not be timely, for example. So they might be asking a question about something which no longer exists.
I
So
see.
maybe yeah, so maybe there's some kind of, we're not doing a good enough job of giving them accurate and timely information. So they should rightly ask questions as to what's going on. And so we are not doing a good enough time on the reporting side. So we're kind of chasing our tails a little bit. So then just real quickly, I mean, there's a lot to get through. Again, just want to whet your appetite, give you a little flavor. So we look at the requests, and then so let's just look at the priorities in 2026, and we'll touch on the impacts of 2025. Cash forecasting accuracy and efficiency is at the top, so I'm not really shocked by that. What I am really glad to see is, in the third position, is improving collaboration with AP, AR, and FP&A colleagues. And so to me, effective cash management means collaboration, and technology can actually facilitate that collaboration. And I do a lot of other research work on silos. There are silos that are pervasive within Treasury, within AP, within AR, within FP&A, and across AP and Treasury, particularly AR and Treasury. And so those drive inefficient operations. So anything kind of stick out to you, Eric, or any comments you want to add here for us?
Yeah, just one brief one around
Yeah.
optimizing liquidity. I saw that close to the bottom.
Yeah.
And for me, like my mind went to like, well, that's a pretty big lever for the business if you can
Right.
optimize liquidity for Treasury. And then I was like, well, it's probably low priority because there's all of these other things that are more difficult,
Right.
more
Yeah.
consuming, which is likely why it's there. But
Yeah.
that was the thing that stuck out to me. But I
Yeah.
agree with forecasting.
Yeah. It's what I've been seeing for the last 20 years is that cash forecasting is important, but cash forecasting isn't success. It's how we leverage the information, and we got to have good information, timely information, to allow us to optimize liquidity. So the measure of success would be optimizing liquidity, but I have been kind of banging my head on the wall for that one for a long time. So it's one of the things that I look to do is to get people to define Treasury success, like you mentioned, like optimizing liquidity, adding value metrics. And a part of that, right, we have to have cash forecasting accuracy. We need to have collaboration, we need to have visibility, but those are inputs to the success metrics and not the metric itself. So I like this question, and want to know, I got some good collaboration with my friends at Nihilus about some of the questions to ask. So one of the things, that we're going to look at is, okay, we're investing in technology. What are the consequences that we've seen this year because of inaccurate cash forecast or untimely reporting? And then I kind of tease this one a little bit. Questions, inaccuracies. So we're chasing our tail, answering questions that might not be relevant. 47%. And too much idle cash was a big number. 40% actually surprised me a little bit, and we'll dig into this a little bit. It was actually shocking to me how much idle cash companies have in general, and then how much of their liquidity is currently tied up as well. So any bullet points stick out to you here?
Yeah, no, I mean, I'm going to be curious to unpack what's in the 15%, none of the above, because that's interesting to me, because I see a lot of the other things often. But no, I think for me, forecasts aren't about pretty charts, right? You mentioned this earlier, but they're about avoidable costs and capturing easy earnings. And so if we trust next week's cash, we avoid those emergency draws, and we can place the short-term investments with confidence, et cetera. So yeah, this was interesting in that sense, just because it echoes a lot of what I'm hearing in the marketplace. But I'd love to drill in at the none of the above 15% at some point.
All right, we will do that. All right, so just again, as always, chalk content. If you like a copy of the slides, please just send an email to me, and then also again, you will have easy access to the survey report, which really gets into the why of the results. So we see spikes here, and the analysis really gets into the why. So here's so I wanted to dive in. So we say, hey, what are these priorities and why are they important? So let's get at the why. So I mentioned this earlier. So look at cash and non-interest bearing accounts. That's disturbing to me, that that's not all 0 to 5%. So 6 to 10%, almost half of companies, and then percent of liquidity, right? Idle trapped cash, which also depends on what country you're in. But we have an awful lot of what I almost see, it depends on the country and the idle cash, but some low hanging fruit in an area to add dollars to the bottom line, right? As we start to increase the yield that we should be getting in our cash balances. So we don't have to be as conservative because we don't understand the dynamics to our receipts and outflows. Anything else stick out to you here, Eric?
Yeah, no, I just kind of piggyback on what you said. I see this often in a lot of the conversations we're having is they're focused on forecast accuracy and not really explaining why that forecast accuracy is so important.
Yeah.
Specifically with idle or trapped cash, money sitting still is money not working, frankly. I'm reminded of a couple organizations I spoke to recently that had like very simple rules that if they're 80 or 90% confident on the next 5 days of inflows or something like that, then they sweep it all to an X dollar or X% interest earning spot. So small rules like that really turn the forecast into a cash machine. And from our perspective, you kind of build the value of having accurate forecasts by doing things like that.
Yeah, I was speaking to a CFO a couple weeks ago, and he was just telling me how he was communicating, how much value he was adding, right? And he was just telling me, he's added hundreds of thousands of dollars to the bottom line, and it didn't involve tying up their money and getting into risky investments. So it was a huge win. So having the right systems in place and just having the visibility and reporting is often offers us some low-hanging fruit to prove the value that is delivered by Treasury and get us that seat at the strategic table. And then just kind of looking at, right, we see that from the last slide, things are more complex. So what are we going to have more headwinds in 2026? DSO and DPO, the short answer is yes. So a lot of the companies we surveyed, 32% increase significantly, and then DPO. So obviously there's some alignment between your DSO is going up and your DPO is going up. Maybe you're trying to delay those payments. So what happens with these dynamics? DSO, we have to do a better job, right, of managing our relationships with our customers so we can at least get some predictability into that. So everything that we do that impacts customer relationships is important. And also on the supply side, as much as it hurts, we need to communicate that we're going to be paying late. And we might have to offer some insights into that. We damage those supplier relationships, we can get ourselves in big trouble. And at least in the manufacturing and other product spaces, we can't grow revenue if we can't make our products. So anything stick out to you, Eric, or any implications that I didn't catch about these DSO and DPO dynamics that will continue next year?
Yeah, I would just say I don't think folks should be fighting one giant DSO number. Like, from a practical perspective, you could look at a handful of customers that cause the most delays and have AR mark them like green, yellow, red in a scorecard, and green lets us invest cash longer. Red tells us to pull forward collections, et cetera. So it's almost kind of just managing a bit better because some of these things, are just going to come as they come.
Yeah. All right. Thank you. So another point I kind of touched on a little bit earlier, daily bank account, visibility of bank accounts. And so we still see that 3/4 of the companies don't have daily access to more than 90% of their bank accounts, as I think we've already talked about that enough. So let's just leave it at this. You can't manage what you can't see, right? And so you'll be amazed if you don't have that visibility, how much value you can add to performing better in Treasury, but also making those more informed decisions as well. And then we also want to see a little bit of the headwinds. In the end, we're talking about headwinds so we can discuss how AI can help us with those and Treasury technology. So time spent on manual add tasks. So we still see this is pervasive. I would say waste of time. Only 6% of companies spend less than 10% of their time on manual. I would call these non-value add tasks. So one huge benefit of AI, which used to get more attention before generative AI kind of took over, was being more efficient. So we have more time, and then we'll get to this a little later. What are we going to do with that time? So Eric, do you still find that your clients and potential, I say your potential clients, still have their team spending a lot of time on these non-value add tasks?
Yeah, it's sometimes tough to listen to how much time exactly, because it's like,
Right.
why there's so many options out there. But I will say, like, I'm not anti Excel, right? I'm more like pro
Right.
separation of duties. I think Excel is great for like what ifs when board stories and things like that. But a system should be getting the files in, running jobs on schedule, keeping an audit trail, that type of thing. Um, Now with AI, which I'm sure we'll talk about here later, there's a
Yeah.
lot of those things that can be replaced by something, some type of system like a nihilist or something similar. But yeah, it's tremendous how much time is still being spent in spreadsheets today.
Yeah, and I still have conversations with treasurers, and they don't specifically have conversations and understand how much time their team is spending. So those are conversations that need to be had, and I believe that should be a treasury metric. How much time is each person spending? There's things that you have to get done, and we could put that as not as non-strategic, but a lot of times there's just no understanding of how much time that is, and then you can also put some dollar values on that. So then again, have some more analysis there. And then of course we have to do the standard, how many people are using Excel. And then as Eric mentioned, I've been hearing Excel is going to go away for the last 20 something years. So it's not going anywhere. So it definitely has its uses. So we have I would say a little bit of a barbell, 32% Excel and 26% TMS. And then I've seen ERP use very common in enterprise companies, and what I always conversations with those folks. A lot of times, to me, it is about a system such as Nihilus. I would say it supercharges your ERP. So your ERP was not built to do certain things, and so it really supercharges the value that you can get in the efficiency on the cash forecasting front there. All right. All right, here we go. The role and impact of AI in Treasury. So here it is. I love this. So, okay, we use AI, we get more time. Where would we spend more time? So we had 59% strategic planning. So Eric, why don't I give you first shot at this since I'm taking some of the easy things to comment on here. Any thoughts here?
Yeah, no, I mean, I love that most of this or a lot of this was on strategic planning and
Yeah,
optimization of yields, right? Like that's where I get excited because
yeah,
frankly that's what we're positioning, that's what we're pitching. But as a sales leader, right, I see AI projects succeed when they start small and earn trust. So some of these things are big and grand and awesome, and a lot of folks are talking about them, but even small wins like spotting weird payments early or flagging
yeah,
late payers or explaining any kind of change in plain language. These are things that AI can do for the function of Treasury today that don't require all of this investment and all of this stuff. But take away some of that time spent, like you mentioned earlier, and apply it to some of these things, and all of a sudden you're
yeah.
a very large value lever for the Office of Finance.
Right. Yeah, and I would just, the only thing I would add here is I like to see the business partnering at 41%. So let's level set a little bit here in terms of knowledge. So this is a question that I ask as well. So just curious how you would characterize the general knowledge of AI within your treasury teams, your colleagues. So would you say very knowledgeable, somewhat familiar, heard of it, and not aware? So we will definitely talk about a little bit about how to right size that knowledge. I have probably a well-known views on this, on how much time you should really dedicate yourself, and then how much you should expect of your team in terms of their AI knowledge. And of course, we don't want to just start adopting AI in Treasury if we don't really understand how it works, what it's doing, and some of the concerns that should be had, some controls that we need to be putting in place. So reminder, if you're interested in receiving a certificate of attendance for today's webinar, please answer all the polling questions. So have a little bit slower momentum in getting the polling questions answered. So I'll leave this up for another 5 or 10 seconds. Again, we can take your questions area of your GoToWebinar control panel. Also want to let you know that I'd be happy to send you a copy of the slide deck. And again, that survey report is going to be readily available to you. So I'm going to go ahead and leave the polling question up for another 5 or 10 seconds, and then we will go ahead and take a look here. All right, let's go ahead and thank you everyone that voted. Let's go ahead. So we see, I think we have a lot of honesty here, which is good, which as Eric touched on, sometimes when I look at my survey results, I kind of scratch my head, really. So only 17% would say knowledgeable of their treasury team. So that is something that you really want to be looking at. And if you have already adopted AI in certain areas of treasury, I think it's important that we educate those on our treasury team. 60% someone familiar, 17% have heard of it. And so this is just myself. I think it's important that we get our folks up to what I would consider knowledgeable in terms of how it's being used, right? How are we going to use it within a certain system? Now, I think it goes a little bit too far when some companies seem to think that every treasury person has to be a data scientist and know how to program in Python. I, as a practitioner, would look more to my providers, my technology providers, in terms of on the treasury side of it. Eric, any thoughts here?
Yeah, no, you said it. It seems like everyone's being pretty honest here, which I do appreciate.
Yeah.
I wouldn't even consider myself very knowledgeable, even though I work for an AI
Yeah.
treasury business. But yeah, I mean, I think for those that are somewhat familiar or below, probably thinking about like personal or commonplace LLMs
Yeah.
like OpenAI, ChatGPT, Claude, and the like. I would encourage everyone, just as a general rule of thumb, to start interacting with LLMs a little bit more commonly with personal things, right? Obviously, you want to be conscious of what you're putting in from a company perspective, but using it to like, I don't know, figure out how you want to plant your garden or how you want to budget, your own expenses, that type of thing. It's gonna. The reason I say that is because it's going to start giving you a better understanding of how you can engage with something like an LLM, and then as you apply that internally to your business, you'll start to become more creative and more of an asset to the team when you're saying, hey, this is actually a function or a way we can use AI for treasury specifically. So that's the only comment I'd have there.
Thank you. Yeah, just for any of you that might not have heard, LLM is language learning model. So that is on the generative AI side. So, but yeah, I completely agree. And what it also does that if you start interacting with the LLMs, it makes you see why there needs to be caution when you start to see some of the answers that you get. So one of the things that we need to be looking at is how it's being used and who's using it and how it's being trained on which data. And if people are using different LLMs, they're going to get different models if it's being trained on different data. So we've heard one version of the truth, right, in Treasury for a long time. Well, now we have to be more careful than ever, and we have one version of the recommendation, right, that's coming from some reliance on that generative AI. So thank you so much, everyone, for answering polling questions. So what we saw here is we see the survey respondents, I would say, have they're pretty good acumen. Over 50% had at least knowledge. And then the other thing which was important is, do you have support for the use of AI within and beyond Treasury? So it was good to see that 63% of the companies had that. So we obviously want to make sure that the CFO is on board before we start experimenting in AI, and we definitely don't want to get our data out everywhere, right? And compromise. But this kind of sets the table in my mind, right? Do we have support for AI? Do we have a specific company policy for AI? And that's something that we should definitely be involved in. We want to be engaging our risk management team. Maybe we have a cybersecurity team, our risk management team, to understand what our policy is and to make sure that our team members and ourselves, we are not exposing our company to those risks. So, Erica, when you've been having conversations, have you found that company leaders seem to be supportive of AI, or is it neutral, or does it just depend?
I mean, it depends. It depends on the size of the business and priorities and stuff. I mean, I think for the most part, everyone is pretty excited about what AI is and what it can do and how it can be applied. But from a practical perspective, like most organizations are still thinking about the simple things that we talked about earlier. What they don't understand is, when we think about AI, it's beyond just the LLMs, right? It's like a remote worker. This is what they call agentic AI. remote worker that can handle all of these tasks, these mundane things, with some higher level thinking, we'll call it, applied.
Yeah.
So it's not just like robotic process automation or something like that. So I am
Yeah.
hearing a lot of that in the market today.
Yeah, and I just wanted to get a sense of kind of the adoption and traction among the survey respondents. And there's obviously a high appetite among the survey respondents. So 40% of the survey respondents have had an AI specific initiative in Treasury or Finance in 2025, and then another 38% in 2026. So as we start to look at the survey results, we will see that these companies have an appetite, and we'll start to see, if we didn't see yet, why the inaccurate forecasting. So they're seeing the consequences of the cash management hurdles that they face, and realizing how AI can play a role in helping them make more informed decisions and helping them do a better job of predicting what's going to happen and understanding why. So let me get a sense. I want to pause here and just get a sense of the folks in the audience. You should be able to select more than one answer if it's relevant. Share with us in which areas your company currently leveraging AI. I would fraud that within cash management. I consider all these cash management, cash forecasting, accounts payable, accounts receivable, fraud detection, or none of the above. So I've seen some results vary here quite a bit, and I'll wait to comment on what I'm seeing and why I think I'm seeing it for you to go ahead and quickly just push the button, the survey. So appreciate everyone's consideration. If you can just tap that button for me. So let me go ahead and leave the polling question up for another 5 or 10 seconds or so, and then we'll take a look, and then we'll do a little color commentary, the analysis, and then we'll take a look at the survey results and see what we saw from those Treasury and finance leaders who have responded to the survey. So I'm going to give you guys another few seconds, then I'm going to go ahead and share the results. It's not basketball season yet, so I usually like to do my countdown, but I'll save that for basketball season. And by the way, Purdue's going to win it all this year. All right. Let's take a quick peek here. So we see 60% of our 59%, almost 60% are not leveraging AI just yet. So we have a great opportunity here, Eric, to inspire these people, right, on why they should be looking at it and what they need to look at it if there's any caution. 24%, not surprising, leading cash forecasting. AP and AR and fraud are pretty much equal here. What I've seen is a lot higher adoption in AP than AR. And to me, that's kind of backwards. But if you look at technology in the AP and AR space, AP was actually leading with the adoption of AI, but it wasn't generative AI. I would call it RPA is not quite AI, but on that side of it. So interesting to see cash forecasting is at the top. But to me, I see more in accounts payable. Eric, what are your thoughts here?
Yeah, no, I echo a little bit of what you're saying around like robotic process automation versus AI. So for me, at least, I'm happy to see cash forecasting is up there, mostly because that's where we spend a lot of time and that's where we focus. So if folks are thinking about that, that's great. On the APAR side, I would agree. It's a lot of repetitive tasks usually, but AI today, at least in my opinion, is looked at more for like I wouldn't say applying judgment, but applying some type of analytical perspective on whatever the data is telling us. So for forecasting, it makes sense. I would say though, for APAR, I don't know if this is the use case, but you can start to use it to predict, who's going to slip and which payments are likely to clear, so teams can start to prioritize where they're focusing, I think. And I was, again, my CPA background, when I saw fraud detection, I got a little excited because that was a big ticket item for us. But yeah, it's the same thing. It's about pattern breaks, supplier hygiene, just basically catching the oddballs before any kind of money moves. So this is cool to see. As for those that aren't leveraging AI today, I highly encourage you to talk to your peers to see how they're using it, because you might inspire some ideas.
Yeah, one of the things that I started to see, and I think is a very good way to leverage AI in AR, some of these software providers it's training the response, right? How often you reach out to a customer, how you get collections, and as you mentioned earlier, where do I focus on my DSO and DPO? So on AR, we're not just doing all these dunning things where we hit people, you owe, you owe, you owe, you owe. So it's helping us determine the best way to interact with our customers and suppliers, which is incredibly important. So we need to understand the strategy there.
Yeah, and by extension on the APAR side of, if you're thinking about it more from like a relationship management perspective,
Yeah,
it's pushing folks to do what you want. It's more just understanding when they're going to
yeah,
do what you're
exactly.
going to do, and use that information to fine tune your forecast, for example, which provide a lot of value as well.
Yeah, just to dovetail on that, and I'll talk about this a little bit, maybe if we have time, but and part of what we see in relationship issues are because people don't have visibility into things. And so you could be in Treasury expecting a payment from a company, and then all of a sudden they go over their credit limit and you hold the order. But the CFO at your customer talked to the sales guy and said the payment's going to be a week late, and your sales guy said it was okay. So now we're getting into this contentious place with our customer where there was no need to do it. Like it or not, we said it was okay. So those asymmetries of information and lack of coordination in managing relationships cause issues. All right, so let's take a look. We asked where it could have the biggest impact for the company surveyed, cash forecasting, which makes sense. And then there was quite a bit of adoption by our survey respondents, cash forecasting, 55%. So over 44% are in one or more of these areas: fraud detection, cash forecasting, AP, and AR. So that's just food for thought. And if nothing else, it's like, wow, there has to be a good reason why these companies are investing in AI. So let's educate ourselves and see if it makes sense for our company. So, and just on the fraud side, I've done a few webinars on that. The sophistication of the fraudsters is incredible. Not only the external actors, but how they can engage with your team and the deep fakes and all that good stuff. So I don't want to scare everybody by that. So also kind of let's get at the why not and see what kind of myths we have and if they're kind of valid. In that, I think a lot of these are. Data security, I agree with that. That was the top. Lack of AI knowledge, we talked about that. Absolutely. Lack of direct control of our actions. We talked a bit about that. I was surprised that was so high. And then staff and job displacement. I think that's still a little bit of a myth. I've been doing Treasury surveys, looking ahead to the year coming, 5 or 6 years. I've never seen any traction where we've seen, knock on wood so far, any displacement because of technology. And then a little bit of a different take. What's the biggest barrier? We look at its data, expertise, and cost. Eric, any thoughts you want to share on either of those two graphics there?
Yeah, on the adoption side, a lot of that's fair, right? Data security and AI knowledge.
Yeah.
I think that makes a lot of sense to me. As just to echo what you're saying on the job displacement, I don't look at AI as making teams smaller. I think it just makes their coverage bigger. A lot less time copying numbers and more time actually taking action. But everything else there, I think, makes sense. It's just a matter of learning the technology and understanding kind of what it can and can't do. We'll probably squelch some of those items. But as far as the barriers go, I think I see what's that system integration, complexity, and data quality concerns as the highest. So we're running into this a lot, especially for larger organizations where the infrastructure is very complex and the data quality can be impacted by the integrations of the systems. And what we're finding is for tools like ours that are AI native that can essentially attach to or be on top of an existing infrastructure, we can kind of get around all of that complexity. Whereas some other TMSs that are using AI kind of have a different baseline, different infrastructure where this would seriously be a concern because of the existing complexity. So something to think about there as you're thinking about exploring AI and your AI provider.
Yeah.
And then
thanks.
yeah.
Go ahead.
One last thing I'd say is the lack of AI expertise in the Treasury team. It's similar on the concerns. I think,
Yeah,
again, adopting AI for personal use is probably going to be the quickest path
yeah,
there, because it's similar technology. It's just applied differently.
right. Yeah, we have a few questions around. We're not, I guess we're not. I think we're not asking the question if we're leveraging AI for interest rate management and FX risk management. To me, that is being done in some sense as we get visibility into our cash movements and control our cash movements. We are still working to get visibility into our exposures. So I think if we say cash management, to me that implies that companies are using AI to help them leverage their FX risk, and I should have included that as well. So I just think that is a layer of analysis that needs more attention. But I think that's where we'll start to see more focus. And to me, the FX side, exposures, but then also that counterparty risk management, and those counterparty dynamics drive our FX exposures as well. Eric, anything you want to add on that at all? Any thoughts?
Yeah, I mean, there's just so much application of AI. It's like where to start, right?
Yeah, right.
You nailed it though.
Yeah. Okay. And this is a question I love, and this is courtesy of my friends at Nihilist. So we ask folks to share with us: do you believe AI will outperform due processes within 5 years? And this is one where I kind of scratch my head. But we still have some that are somewhat likely, neither likely or unlikely, so 30%. So I guess in the process side, I don't see how it does not outperform us. Otherwise, I don't think it's working right. I'll put it that way. And then will impact the size of treasury teams. And this is what Eric mentioned. I think a lot of us are understanding that we can take control and redefining our value proposition, and we can increase what is under our umbrella and leverage AI to help us take all that on and deliver value. Any thoughts here on these graphics, Eric?
Yeah, only thing I'll say is I was very happy to see the AI adoption impact the Treasury team size. It's good
Yeah,
to know that folks are thinking like, hey, this is actually going to be a partner of mine, that it's going to enhance what we're doing, as opposed to kind of the fear mongering that a lot of folks see online.
yeah. All right, thank you so much. So let me go ahead. I'm going to go ahead and launch a pull-in question here as we go through our key takeaways and our final thoughts and comments from Eric as well. So some of the key takeaways: Treasury teams, they have an audience with the C-suite, and many of them are being consulted daily for real-time insights. So that is where we want to be. As Eric mentioned, the technology is out there, it's cost effective. So you need to figure out, right, how can I make that happen, right? Who do I need to convince? Who do I need to get on board? Cash forecasting, efficiency, accuracy, and collaboration with AP and AR are those challenges that we see, the priorities. And then that obviously leads us to believe, if we're looking at investing in technology to improve how we deliver value, right, and have more time to do so, AI makes sense. And that's what we see in the survey respondents as well. A lot of traction in cash forecasting, especially, and then AP and AR as well. And a couple other treasury teams are still wasting a lot of time on manual add task. I don't think it's surprising, but we need to put some numbers behind it. I just don't think we have that. So this is good to see. Ask the questions. Think about it yourself. How much time do I waste? Colleagues, you're the treasurer. How much time are we spending? Why? How can we make that better? How can we facilitate more collaboration as well? And another thing that sticks out to me is there's an awful lot of idle cash and liquidity trap. So how can we leverage AI and technology to help us unlock that? And then just in general, treasury teams are facing headwinds, right, in managing cash. The DSO, the DPO, the dynamics. So our job is not getting any easier. So we need to be educated on it. We need to fight for investments in AI and related treasury technology to help us do our jobs more effectively. So, Eric, do you have any closing comments or thoughts you want to leave our folks with today?
Yeah, I'd say I would encourage everyone to start to think about it, not necessarily force anyone to adopt AI, but start thinking
Yeah.
about it. And at the end of the day, AI isn't, this kind of the way it's portrayed in movies and everything else. It's honestly
Yeah.
just a more analytical automation. And so for a lot of the mundane things that you might be doing and the things that you want to do but can't, might be a good place to start as far as thinking about AI or agentic capabilities.
All right. Eric, thank you very much for taking time to share your insights with us today. So I appreciate that. Thank you very much. Again, these things we touched on before, uh, complexity and integrability, data quality concerns. So AI is important. We still have to make sure that we're doing our due diligence and understand the control. And Treasury teams are going to get larger. So we can leverage technology to redefine our value proposition. So I want to share that Nihilist, I'm proud to have them as a partner on my upcoming cash cash management tech virtual forum on December 12th and 13th. Nihilist product demo will be delivered at 12:10 to 12:40. That should be PM. That would be a very long demo, Eric. That'd be like 12 hours. So you'll have the opportunity to register for the event. I'm asking you in the closing survey if you would like to be registered for that. I want to also once again thank my webinar partner and strategic thought leadership partner, Nihilist, for sponsoring our webinar today. I sincerely appreciate that. Also want to let any of you know that are going to the AFP conference in Boston. I strongly encourage you to go to the Nihilist booth and you can actually meet Eric in person. I know they've got some exciting things going on at the AFP annual conference. And finally, to the audience today, make the rest of your day great, everyone. Until next time.